Hey guys, welcome back to Control Z Crypto. Baked beans. What is it? How does it work? Are you going to make money? Are you going to lose your money? Are you going to get passive income for life? So these are the questions I've been trying to answer. There's been kind of a lot of hype around baked beans. A lot of people saying it's the best thing ever and it's going to last forever. It's going to make everyone rich. So as always, I'm always very skeptical about these claims. I like to really understand how these smart contracts work, how they actually deliver value. And so I have spent a bit of time researching baked beans and trying to dig in as much as possible and understand how it works to enable to so I can quantify those risks and try to put forward a model for my own use that tells me if it is worth investing in or not. So if that sounds interesting, if you want to kind of get into the weeds with me and try to understand this thing, please keep watching. If you like the content, if you want to see more, please hit the subscribe button and the like button. That really helps me out. If you want to invest in baked beans, if you decide after watching this video and doing your own research that you want to invest in baked beans, then please use the link that I have in the description. It's a referral link, and I do get some of that money back. It's a very small amount for baked beans, but it is something. And so I would never tell you to invest. I don't endorse any of these apps that I review and that I talk about. I am not a financial advisor, and I'm not an expert by any means. I'm just a guy trying to research these things and trying to understand them and to share my findings with you. So with that being said, let's get into it. And I guess, look, at no time is the fact that I'm an expert, not an expert, more apparent than with baked beans, because when you look into this app, it's actually very hard to get good information. And when this was first put forward to me as an idea, hey, take a look at this app. It's doing really well. It's lasting for ages. You kind of go to the site and you try to work out how it works, and you're confronted with a very simple page here, and it basically gives you a contract balance. It tells you how much is in your wallet. I have put some money into beans in an effort to, I think sometimes the only way to really understand these is if you kind of get in there and do it for yourself. So in fact, just in the last 12 hours, I think, or sometime earlier today, I've made a deposit in there. And then there's kind of a daily return, an APR, which seems very high, and a dev fee, which seems very high, referral link, and not much else. So there's a Twitter, there's a Telegram, and there is a BSC scan address. And until actually earlier today, when I've looked at this in the last few days, this link was actually broken. It said BSC can, not BSC scan, and will just take you to a broken link or something along those lines. It had an invalid character in there. So it's been very hard from the beginning to actually understand what baked beans is and how it works. And on first glance, when I looked at this, I thought, okay, well, you've got some sort of token involved. There's BNB, there's a token called beans, and you've got a number of beans, and there's some sort of some sort of calculation involving those beans, and you get kind of a return based on the beans. And that's kind of partially true, but partially not true. And so the digging into this to really understand how it works, you go to the YouTube and search for baked beans. How does it work? And pretty much every single video, including from some content creators that I like and tend to trust, it's really nothing there that explains how this thing actually works and what's happening in the back end, and what is this all about? How does it actually give you returns? How do you get that 8% daily returns, and is it sustainable? So in the effort to kind of dig into this, the starting point is obviously going to be the contract. So you look at the contract, it has a contract balance. Try to have a look at the contract itself. Now, there's no linked audit here, which makes it really difficult. I did have a look through the contract code. I'm not a developer, but I do have some IT experience. No security audit is attached to this contract. And it's very hard to actually find out just looking at the contract itself on BSE Scan how this whole thing works, although the contract does provide some clues. So then you go to DAPP Radar and you say, okay, so on DAPP Radar, what does that have to say about baked beans? And it's all very much this kind of same narrative that the YouTubers use. Hey, you deposit BNB, you get beans, you bake beans, and then you eat the beans. Isn't that funny and fun? And let's all do it and make money. And for me, as an investment decision, I never base any investment decision on how fun the UI is or how cool it is to be baking and eating beans. So I want to know what this is actually doing. I want to understand what beans are. Are they an ERC20 token? Are they doing something in the background? How does this actually deliver its profits? So its returns for you. So the next step is to track down the audit. And I did find an audit. It does exist. It's not linked on the website. It's not linked on the contract address. It's really actually difficult to find. And this is, just through searches, it's possible to find if you go on the, if you go, for example, in the Twitter or in their social media pages, you can find this documentation, but it's a matter of digging. It's not like these other apps where they put everything out front and they explain how it works and they explain, they link to the documentation and they explain what this thing actually is. You've kind of got to be in that community. You've got to do the digging and find it out. So this audit is Ethos. It's not the usual Hays crypto audit that we've been looking at. And I think there's some pros and cons looking at this audit. So number one, it's kind of well laid out. They've got a good methodology that they kind of call out up front, and it's structured. It gives this kind of code review with low severity. But there's a lot of things missing from this, because what this seems to be more than anything, this is the end of the document. It's very short. What this seems to be is a code audit, and it's what it's really auditing is how secure is the code and how much does it follow best coding practices. So in that by that metric, you could say, yeah, it's well written. It's good code. As far as code goes, it doesn't have any kind of major loopholes, but it doesn't have things like, well, where is the money coming from? Normally what you find in the Hays crypto audit is well, what are the actual rates that are in the contract, for example. Sometimes on their documentation or on the website, it can have rates or fees that are different to what's in what's in the actual contract, and that's what those Hays crypto audits show. This one doesn't really show anything about what the actual contract does, how it operates, what the returns are going to be, what the fees are going to be, anything that we can use to build a model and to work out how long this could work. So trying to do the research and understand this, I had basically heard from some people saying, well, how this works is you deposit BNB and then the contract kind of in the background, it gets these beans, and these beans are a separate token, and they're invested elsewhere, and they're invested in other smart contracts and other kind of low cap coins and tokens and things, and there's actual real money coming into the beans. And then the beans, when you get your rewards, you turn it back into BNB, and it's not completely Ponzi, it's not completely ROI, because you've got these beans in the mix, and these beans kind of add the value, and that's how it all works. And I just couldn't see anything to do with beans, and these beans don't exist anywhere that I could find as an ERC20 token. They don't exist outside of this baked beans app. So I did look again at the contract, and what you do get when you look at the contract is you find this terminology that is in here around these things called eggs, and let's see if we can find something. We can go down this contract, and you'll see things like eggs hatching, timers, claimed eggs, hatchery miners, and so this gave me a bit of a kind of path to go down, and I landed on this crypto egg game, which is not something that I know about, and I tend to avoid these kind of gamified crypto DeFi apps. I think they're a bit tacky, and I like my DeFi, I like my investments a little bit more straightforward and understandable. But this is really the key to the whole thing, because at its base, the baked beans is essentially a fork of this egg game. So what I did is took both of the contracts, the smart contracts, put them side by side. You can see them here compared. Beans on the left, eggs on the right. So beans, you have this baked beans logo. You've got this safe math library. That's the main difference between here. As you scroll down, you kind of got the safe math library on the left. This safe math library seems to do a lot of just it's a library that seems to just handle basic maths calculations in a way that is good or safe, or meets some sort of criteria that is worthwhile for smart contracts. I'm not an expert, but it just seems to be a math library, and you can see these functions are things like division, multiplication, addition. So it's there on the beans on the left. That's what the difference is, but it's actually also on the right, but they've just put it at the bottom of the smart contract for eggs. So that safe math library, it's a different version. It's kind of smaller, but it's still there. And the major part of the gap is in the middle. So that's where they are the same. Most of the meat of the two contracts are the same. There are some differences here just in the way they handle things. You can see some differences in the calculations if you go through. And look, I haven't taken the time. This would take a very long time, especially for someone like me who's not a coder, to try and work out exactly how baked beans works, and exactly what this is doing step by step. You need to kind of map it out, draw it out, and go back and forth. You can see some basic differences here between the market eggs and market eggs here. These are different values and different ways of calculation. And if we go back to the crypto egg game, we kind of start to get a picture of how this works, and similar language is used in the baked beans one as well. So yeah, so let's just, I guess, read this and try to understand it together, and I'll tell you what my conclusions are. So here it is. We're saying you buy with 0.1. Okay, unlike its predecessor, which paid 100% daily, crypto egg game pays a modest 10% daily, allowing investors to rest easy knowing that their investments have unlimited growth potential and a maximum improbable risk of less than 10%. It's a verified public contract, so it pays 10% daily according to the current mining efficiency rate. So this is interesting, and we'll come back to this, the mining efficiency rate. Mining efficiency rate rises and falls as you and other players hire miners, compound earnings, and pocket BNB. The objective of the game is hiring more miners sooner and more often than other players. This in turn earns you more BNB faster. Hiring more miners using your daily BNB earnings will 10x your miners within 30 days or less. So, and here you can see, I think, 0.1 BNB hires 136 billion miners. I'm not sure if that decimal is a decimal or a comma, but anyway, it's in the billions of miners. So, you look at this and you go, what's a miner? What's an egg? What are these things? They don't seem to be ERC20 tokens. So let's have a look at one more document I managed to find, and this is a baked beans miner FAQ, and this is again another document that is you can't really find. It's easily. It's not on the website. They don't put this information just straight on the front page for the Baked Beans app, which is very frustrating in my opinion. I found this in the Telegram group. When you join, you get a link to this and some other kind of repository of documents. So the information is there, but it's difficult to get to, and it doesn't really necessarily explain on a technical level what this is doing. So it's a fun spin on the token miner meta, which again, for myself, I don't have any experience in that meta. It's a simple smart contract which acts as a BNB reward pool, returning 8% of your BNB deposited on a daily 24-hour period. There is still BNB in the contract, the rewards will continue. So so I see this line here, if there is still BNB in the contract, your rewards will continue. That that is very reminiscent of all the ROI apps that we've been looking at with similar terminology. Hey, we'll pay you 10% per day if there's still, Matic or BNB in the contract. If the pool is dropping substantially, then rewards will decrease around 3 to 5% and can go low as 1% per day. So this is also very relevant. So basically, that 8% reward is a ceiling. It's as high as it goes, but it could go lower. And I was curious to understand, on what basis this could go higher or lower. Baked Beans Miner is essentially a locked staking rewards pool. The funds deposited are transferred into what we call beans on the DAPP, and then act as miners who gain BNB through the smart contract algorithm, then feed out the BNB in the rewards section on the DAPP after each passing block through the BEP network, BEP20 BSC network. So in this, we say that they're converted to these things called beans, and these act as miners. So this is really confusing. Like, what does this mean? They're converted to beans and they're acting as miners. So as I said, some people are saying like these beans are invested outside the contract. They pull in value from other smart contracts, from other tokens on BSC. I just can't see, having looked at the contract, again, I'm not an expert, having tried to kind of work all this out, I can't see any evidence of these beans actually being separate tokens that exist on the chain. And when we talk about them as something like a miner, like these baked beans are a miner, what that actually means is completely unclear to me. Like they're not mining anything. They're not mining in the traditional sense on a chain where you, where for example, are they mining BNB? I don't think they are. Like it's a locked pool. It's got what's going into it is BNB, and it's somehow generating a reward. And so far, all this is telling me it's very close to an ROI app. And unfortunately, the audit, as I've said, doesn't really use that terminology and doesn't really say where it gets its money from. But it's starting to look more and more like that. It's that kind of app. So users of the Baked Bean Miner can choose to rebake their beans to compound their rewards. As they accumulate or eat their beans, take their rewards, which will be transferred to your wallet after paying the usual BSC gas fees. So this is, this looks like an ROI app. You deposit, you can reinvest, or you can withdraw. There's your daily rate, there's your APR, and you've got a dev fee 3%. And I believe that 3% is paid when you're depositing and when you're withdrawing. So you're kind of hit twice. But I don't think it's paid when you're actually reinvesting. But it's hard to get this information exactly. So that's to the best of my ability here. So dev fee of 3% is only taken from deposit and withdrawal, so a total of 6% between both. Well, kind of 6%. I mean, it's 3% one way, 3% of the other, but it's not the same thing that you're taking the 3% of, because your withdrawals and your reinvestments are changing day to day based on how much you have in there. But yeah, okay, 6% between both. The 12% referral bonus is 12% of the 3% dev fees. So it's really low referral, which I think is great. So one of the problems with the ROI apps that we look at is really high referral fees, where you've got these 5% referral fees, sometimes as high as like 7% for level 1. And then they kind of cascade down to like 1% down to level 5. And if you're not familiar with what that means, it means that you can kind of game the system and send, create say 5, 6, 10, 20 wallets and send yourself referrals and kind of get money back and increase your effective return rate drastically by sucking money out of the contract. So you can't do that here. There's only one level, and 12% of 3% is really low, and it's not really worth kind of gaming. Even if you're a whale, it's kind of not really worth gaming. It's a lot of effort for that kind of thing, and conversely, because of that, it doesn't hit the contract balance very hard, and is definitely a big positive for the sustainability of the contract. Okay, so goes into the rewards tab of the DAPP, blah, blah, and the contract is verified, open source, immutable, and it's here on BSC Scan. So yeah, all of these are verified, open source, and immutable. So that's it. So we can have a look at these tactics, because these are interesting. So Um, strategies and tactics. We highly recommend that you rebake 6 and eat 1 weekly. So this is whenever you hear about baked beans, you get told about this strategy and tactic. So everyone's saying when you're in baked beans, you rebake 6 days a week and eat 1 day a week, and that's optimal. And this will create sustainability, longevity, and make your reinvestment, your investment back in around 6 weeks. And I've got a model that shows this as well, which I'll share with you guys in the video as well. So every YouTuber you see will say, hey, I'm doing this rebake 6, eat 1. This is what we do. And it's going to last forever. Okay, if we do this, that's what they're saying. If and when you decide you would like to invest more BNB, then those rewards will be added to the deposit. So this is different to some ROIs where you kind of have separate investments that have different, lock periods and things like this. It's just saying that basically just all gets added in together. Okay, so Baked Beans Miner is for users who want long-term sustainable profits. Baked Beans Miner is not confused with farms or stakings. Beans are purchased with BNB and are essentially hired indefinitely for you to work to gain the rewards. Once again, this kind of language, beans are purchased and you hire things with the beans, like you hire eggs or you hire beans, you hire miners. This is what is really confusing about trying to get to the bottom of understanding how this app works. And from my view is that is really misleading. Like this is what they're trying to do here is to kind of copy this game where you have this kind of miner thing. And I don't know if eggs was the first one or is just the one that they chose to copy, but it's kind of very misleading and doesn't really give you much information on how it works. So, okay, so work gains rewards, the highest rate they will reward you is up to 8%. This depends on varying fluctuations between the price of BNB and the total value locked in the smart contract upon purchase and rebaking. So, okay, I'll talk about conclusions in a minute. Let's just kind of read through this. So, it allows every user to profit rewards consistently, no matter the strategy. Pending some explanations below, it makes sure that everyone receives fair share of rewards. Strategies vary from user to user. You either strictly rebake, strictly eat, or a combination of both, 5-2 weekly or 6-1. In our opinion, the best strategy is to rebake as often as profitable for yourself once you're happy with the daily, weekly, or monthly results. Eat your beans, okay, as the contract rises. As the total value locked rises and rises to a sustainable amount, the eat and rebake functions are completely up to the user. Please take a note that the 8% daily rate is not completely constant, but will vary on a significant factors. And it's implied here that this varies on a personal level. So this 8%, if I were to change my habits and just like eat every day, this will drop just for me down to like 7% or 6% or whatever, but for others might still be 8%. I'm not sure if that's the case. Again, I haven't, it requires kind of a detailed understanding of the contract. But yeah, personal purchasing of beans, rebaking, your personal habits hold much weight regarding your overall personal rewards, just as your daily rewards can also increase and decrease. So we definitely recommend the rebake 6, eat 1 weekly that our community lives by. And that will help sustain close to an 8% daily reward rate as possible through the contract algorithm. So, yeah, so this is interesting because it's kind of saying depending on how you personally use this, the rate will change. And I do intend to just kind of try some different things under this as I go and see how that actually impacts what kind of return I'm getting and how much of that is real and whether it's kind of consistent for everyone. I just don't know, but it is definitely feasible looking at the contract that there might be something like that's calculated, and I'll kind of get into that again in a minute. So after hiring any number of beans miners, you'll begin to see rewards very close to the advertised 8% daily, and the number will rise and or fall based on the factors explained above. We'll not explain our exact formula, but our most humble and honest fashion is one of the most beautiful and fair systems available. Yeah, so look, they won't explain how it all comes about, but look, if you're so inclined, being a smart contract completely open on the chain, you can kind of go in there and spend the time to work it out. So important notes: beans don't have a set price. There is not an amount we accurately guarantee, as the TVL fluctuates, the price of BNB also affects the amount of beans acquired upon hiring them. As the TVL rises, you gain more beans per BNB, so that creates an even playing field for any new user of the platform that they come in. Same as if the TVL was a drop, less beans per BNB, so that all users have a fair platform. We'll adhere to providing more in-depth and detailed chart. Our recommendation is for the 6:1 ratio, and that will keep your beans miners working at an optimal rate. Again, this stuff just is very confusing. When you begin to eat continually, your rewards will drop. The more you eat, the lower your percentage daily earned becomes, all the way down to a miserable 0.5% or less. So if you're hungrier than the 1 weekly, eat and decide that 4-3 works better. Okay, so for you not to expect the same daily rewards as the user doing 6:1. So again, this is kind of the same thing. So it's showing that will go down. And look, I haven't been able to find this white paper. I might just pause the video and just do a quick check, actually. Yeah, I can't find it. So a white paper is not really easy to find. I'm not going to look for that too much more, because I can't find that. Okay. So let's just have one more thing that I wanted to just mention is the is how long this has been operating and kind of what we can learn for that. So if we just go to the analytics and all time, I'll look at the right one here. Sorry, I'm on eggs. Let's take a look at the analytics for baked beans. You can see it's been around since November, and I think to what I've looked at this, it kind of had a long period where it was just kind of not doing anything, and then it picked up January-ish. So it's been in operation for a few months. And from what I've read, a lot of people are really hyped about this. A lot of people are saying, yeah, this is kind of sustainable forever under this 6:1 ratio. It's gonna last a long time. It's gonna provide passive income for life. And so let me kind of, with all of this being said, with all of what my investigation has led me to being said, let me kind of explain what I think, how I think this works, how I think beans works and what it is, how it basically makes its money, and what's interesting about it. So I think fundamentally this is an ROI app, right? From what I can tell, there's no external beans. There's no external coin token called beans that sits outside of the smart contract. So the only money, so if we think about kind of how ROI contracts work as Ponzi schemes, all the money goes in, and then that is used to pay people who invest, and then you kind of hope that more people come in after to pay the people who are in earlier. That's how these work, and the only money in here, the only value in it, is what is on that smart contract balance. There's no value held in beans. There's no value that kind of comes externally to this system. It's all this strict ROI based ponzonomics type situation. But what's interesting is this beans thing. If you have a look through the smart contract, try to figure out how they work. It's essentially like a means of controlling the rate. So when you think about a normal ROI smart contract, the value of BNB, for example, or whatever the base coin is static, so that never changes. And essentially, when you get to when you run out of contract balance, when the contract balance gets to zero, you can't pay people. So the underlying currency is a static value, like a BNB is always worth a BNB. That doesn't change. The underlying return is also static. So these smart contracts, these ROI contracts always say, it's 8% or 10%, 20%, whatever it is, that's static. That doesn't change. What happens is those things stay the same. And when the balance is dry, then no more returns are paid. So what Baked Beans tries to do, using this concept of a bean, which is basically, if you look at the code, to kind of the high level that I've done it, there's this whole kind of economy that's being described here with eggs, because it is a clone of the eggs app, where eggs are created, eggs are then kind of traded, values are adjusted, and there's this whole kind of algorithmic adjustment of values that happens in here. And the end result is that things are variable, and what's variable is the value of a bean, and the bean to BNB ratio, I think, is variable. And most importantly, is the daily return is a variable number. So essentially, this is an ROI contract. If I want to kind of boil it down, it's an ROI contract with a variable daily return, and the lower that when the contract goes down, then the rate goes down essentially, and it tries to do this on an individual level. So if you imagine if you did it for everyone, if you kind of jumped onto this contract and you just started withdrawing your money every day, it would basically run out of money very quickly. And say if it didn't have this individual aspect, it would just kind of have to drop that daily return down really quickly to 1%, 0.5%, because it couldn't afford to pay back money out of the contract. And it seems like the way that Baked Beans works is that it never wants to run out of money on the contract. So as to never run out of money, it drops the interest rate. And so that's essentially it. And if it does it on an individual basis, then it tries to punish people who are trying to just get as much value out as they can. So if you just went into Baked Beans and you're like, right, I'm just going to go get the 8% return, screw the community and what they're telling me to do, I think what it does is adjust that rate down, down, down until your returns go down, and you don't really get your principal, or you don't really get much more than your principal investment. You kind of limited on how much damage you can do to the contract that way. And in doing so, it does actually create something that is more sustainable than a standard ROI app. But how much more sustainable is it? And is this the kind of long-term thing that you can put money in and expect to be getting returns months or years into its lifespan? So I don't have a definitive answer to that, but I've done a little bit of modeling here around Baked Beans, and this is really simple stuff. So basically, if I'm taking the daily rate, what I wanted to do is just compare these two models, right? The daily withdrawal, if I was just going in and making a daily withdrawal of my 8% every day, how would that compare to a 6-to-1, which is, so your what are they calling it? Rebaking 6 days a week, and you're withdrawing one day a week. And how does that actually adjust the balance, and what's the long-term sustainability? So if I take their daily rate of 8% and I'm not adjusting it because I don't understand, they haven't kind of told us how they're adjusting that daily rate. I'm saying you put 100 in, and 100 of whatever. Let's just call it 100 BNB, right? So if I put my 100 BNB in and I'm taking daily withdrawals, this is the day number, and this is how many weeks in we are. So on the first day, I'm making my withdrawal of 8%, and so far I've taken 8 back, and the contract balance is 92, because I'm just trying to calculate how long before I basically get my own money back, and then what's the impact on the contract. So that means within about 13 days, I think it is. Yeah, 14 days on the actually, I've got it highlighted the wrong cell. On the 13th day here, I'm hitting negative numbers. So 13 days in at 8%, that's my kind of payback period on one of these ROI DAPPs, where I'm just getting my 8% every day. So one of the reasons why I think Baked Beans is lasting so long is because of this adjustment, and the fact that people are using this 6-to-1 ratio. And let's calculate what that looks like. So week 1, day 1, I'm only withdrawing funds returns every 7 days. So this formula here, just basically every 7 days I'm withdrawing. And the opposite here, every 6 out of 7 days when I'm not withdrawing, I'm just reinvesting. So that reinvestment increases the principal, which you get paid interest on, and then the cumulative withdrawals here, and then the contract balance. So we start off with your 100 what are we talking about? BSC contract balance that lasts until day 7 when you take your first withdrawal, and that first withdrawal is of 11.84, and you can see equivalently on the daily model, by the same time period you will have already drawn out 56 BNB. So this one is significantly going to drain the balance faster. So within 13 days, within a couple of weeks, you basically drained all the money. But here, if you follow this, it takes much longer, and we're talking 6 weeks before you basically get your money back. And that 6 weeks is the same as we saw on that FAQ. So it's kind of telling me that what I'm doing here is pretty correct. And I think it says 5 to 1 wherever it was under this. It says investment back in around 6 weeks. So so 6 weeks, and basically you can kind of see you're taking out an increasingly larger amount. If you're going with this daily withdrawal model, then you just taking out 8% every day, regardless of how long, and that 8% just kind of adds on in a very linear fashion. But if you're looking at this 6 to 1, it's an exponential. Obviously, it's a compound interest formula that's applied here. So 1184, 1568, 19. You can see those weekly withdrawals are going up very quickly. So this green line represents how long it takes to pay back your initial investment. That's 6 weeks under the 6 to 1. And the other line that I found interesting is, when does your withdrawals from the compound interest approach, the 6 to 1 approach, equal and start to exceed the daily withdrawal. So remember, if the daily withdrawal is basically, if you plot that on a graph for here, you're going to see kind of a straight line. And if you plot these ones on a graph, which maybe I should have done, you can see basically it'll be a curve like this. And at 175 days in, so 25 weeks in, so that's around about 6 months, just under 6 months, it basically is equivalent. So in terms of long-term sustainability, that's the point where this 6 to 1 ratio starts to look a whole lot unsustainable, and like it's going to explode. Because just remember, this is compound interest, so you're increasing that principal here. Your principal is only of 100 BNB, and you're just taking out another 8 every day, right? It's very kind of linear. And here you're increasing your principal. So right now you're getting 8% daily on 1300. So you might even want to just kind of start taking out daily and getting more and more out of the contract. Because at a point, I think I only did this up to 365. So the full year, just to kind of extrapolate this out, actually I don't know why it went to 365. Okay, so after a full year at 8% daily, let's look at case 1 here. The contract balance is down to 820. So assuming other people went in this, you've made 2,820, and that's been your return. But under the other one, where you're doing the 6 to 1, basically the payouts would have had to be 5,607. So it's much higher, like over 365 days. So as it's not entirely sustainable there. So they're saying 6 to 1 is sustainable long term. I think it's actually sustainable short term. I think that's what this is more than anything, because the more you do this, you're still getting to a point where you're compounding the interest. You're owing really a lot of money here. So the contract balance is, in the minus 5,600. That's how much more than your initial investment you've got it. That has kind of come out. Sorry, that's how much more than your initial investment you've gotten out of the contract. And again, this is being an ROI app. This money has to come from somewhere, and it comes from other investments. So I don't see how this is sustainable as kind of long term as they're saying it is. It's definitely more sustainable. Like if you look at between the week 1 and week 2, yes, it is much more sustainable, and it's more sustainable up to about week 6. And then it's also more sustainable up to this orange line, 25 weeks in. But from this point, it starts to be much more unsustainable just because of this compound interest, and the amount that it's paying out is exponential rather than purely linear. So that's just an interesting kind of consequence of this model, and why I don't think that baked beans is kind of a some people think it is. It's kind of a long-term thing. Yes, you do expect it to last much longer than a standard ROI app, because you've just got this this method that forces you, essentially this variable rate forces you into something like a 6-to-1 or a 5-to-2 or a 3-to-4 kind of withdrawal system. Because if you don't do that, if you just try and withdraw every day like here, you're going to get a lower rate, and it's kind of going to round out the numbers so they're pretty similar by the looks of it. So it does encourage a slightly longer period, but at some point it's going to hit these numbers, and regardless of how you cut it, an APR of 2,000 or 3,000% basically is not sustainable. It can't be sustainable for a contract that is not taking in any external value. So that's kind of it for my view of baked beans. I think it does have some interesting features. I'd say it's actually really well thought out, or at least a really well implemented contract, in that it does have a base currency, BNB, that is static. And from a risk perspective, as I've spoken about, I really like that, because it eliminates any token risk. It eliminates worrying about what price you're going to. You're always going to get BNB. It limits the daily return rate, and this 8% is obviously much lower if you're only returning withdrawing every once a week. So that's a much lower short-term rate, but it's a much higher long-term rate if you're compounding. So for me, that puts kind of a horizon on baked beans, and I don't have all the information here and how this works, so I couldn't give you an accurate model. But what I'm showing in this fairly simple calculation is that after 175 days, about 6 months into it, it starts this 6-to-1 starts looking worse than if you're just kind of taking it out daily. And for me, long term, depending on where people have come in as well, this is not something that I would say, hey, get into it and you're going to get ROI for life. I think there's a lot of misinformation based on my research. There's a lot of people saying that there's some sort of external token that Beans represents, and that's somehow invested somewhere. That money kind of comes back into the ROI and comes back into this app and makes it sustainable for long term. I just haven't seen any evidence of that, and I'm happy to be corrected. If anyone watching this video has some more information, something I'm missing, please let me know. But to my view, if I can kind of super summarize, what we're looking at here is an ROI app. It's very similar fundamentally to Matic Staker, to Stable One, to all these other ROI apps we've looked at. Purely, all the money that's in the contract is all that will be paid out to people. And the way that it achieves its longevity and its stability is by essentially controlling the daily return. And really, seems to have an algorithm that never wants to run out of contract balance. So the lower the contract balance goes, the lower the daily return goes. And the more that individuals try to take advantage and just withdraw every day, the lower their individual return goes as well. So it is fair in that way, and does have some interesting features. And I think it's interesting as an investment. As I've said, I put some money in and I'll see how that goes. And if I can make my investment back in 6 weeks, or maybe I can try and do like a 3-4 in the short term and get most of it back to reduce my long-term risk and see how long this lasts. But fundamentally, it's an ROI app, and fundamentally what is in there is what will come out of there. So there's no magic money going in. It's just basically a really complicated way of doing ROI. So yeah, that's it. I hope this has been interesting, and if I've missed any details, please let me know. And as always, happy to be corrected on anything that I got wrong here. And thanks for watching. Hope this has been interesting, and I'll see you in the next video.